Up now, our market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nathaniel. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing North American equity markets trade lower today. U.S. markets down by about 1 to 1.8%. The TSX down by 1.3%. In the United States, you're specifically seeing autos weaker as well as retail and also tech, weighed in part down by the results out of Micron, which I'll get to in just a second here. We are looking to see WTI up by about 7% on the week, so some nice gains within the price of oil, helping energy and energy stocks. But bottom line, as we round out the year, there are still a number of trading days left, but nonetheless, there is a real tug of war going on between the bulls and the bears within the market. So just to kind of step back in terms of both narratives, the bulls are saying that the Fed will in fact pause their rate hikes sooner than the market is anticipating because inflation is coming down. You also have the opening up of China. The Chinese government is removing that zero COVID policy. So that's another positive in terms of global demand. And so perhaps they might believe that we could get a Santa Claus rally. It doesn't quite feel like it to me, but there are still a number of trading days left within 2022. So we'll see. Now, the bearish narrative, though, are the investors who are saying, look, I'm going to listen to the U.S. Federal Reserve. They have been very, very clear. Fed Chair Jerome Powell told us this just a couple of weeks ago, that they are not going to stop short of tightening. They want to make sure that they're combating the inflation. And so there are investors out there who are taking the U.S. Federal Reserve at its word. And that is the bearish case. If the rates have been going higher, has been putting pressure on valuations and tech stocks in particular, and also potentially causing slower, lower growth and causing many CEOs to pull back in terms of hiring plans. In fact, you're seeing a lot of headcount reductions. On the economic data front, because we know that the U.S. Federal Reserve is very much focused on that. Of course, that's most important in terms of understanding where the economy is currently at. Initial jobless claims did come in better than expected. You also the final Q3 GDP revised higher, another positive. But we're also keeping our eyes on what the CEOs are saying. Micron, within the semi space, reported results that missed expectations. The stock's down by about 3.6%. The company actually had much lower guidance than the street was anticipating. They cut their CapEx guidance, and they also announced a 10% planned headcount reduction. So not positive there. CarMax, also within the auto space, that stock's down by about 8% following their results, which missed expectations. I also just, Nathaniel, want to put in a plug here. I had a great interview with Murray Mullen. He's head of the Mullen Group, which is a Canadian company. It's a logistics company that has clients and customers throughout North America. That will air on the Buck Stops Here a week from Sunday. But one of the things he's watching and cautioning for in terms of 2023 are those big ticket items. That's what he believes is going to be very much affected by the higher rates. But I encourage you to listen to that interview. Again, that's a week Sunday. And then this Sunday, I've got Eric Nuttall on, who's a top portfolio manager, one of the largest funds in the world, actually, in terms of energy investing. Now, rounding it back here to Canada, as I mentioned, the TSX is down by 1.3%. It looks as though we might be on track for a 0.6% weekly drop within the TSX. Canadian dollar is trading lower versus the US dollar, which I do find interesting, just given the fact that CPI eased, but not as much as investors were expecting. We had CPI coming in at 6.8% versus 6.6%. And that is leading a number of investors to believe that the BOC, the Bank of Canada, will continue to raise rates at their next meeting, maybe by 25 basis points. Importantly as well, we did, as we look at where the inflation is coming, it is very much on the food front. So you are not misinformed if you continue to see your grocery bill move higher. That has been very much the case. We also had retail sales come out up by about 1.4%. Not a bad number, but the problem is that number was driven by higher prices and also by gasoline, so not volume. It's the higher prices that you're feeling that's raising that retail sales number up by 1.4%. Away from that, just a couple stocks here to watch in Canada, which I think is interesting. Automotive Property REIT, APR is the ticker there. That was upgraded over at Canaccord. That stock's up by about 4.8%. And SPB is up by, they announced a $1 billion acquisition, setting that stock up nicely today as well. So bottom line, Nathaniel, there's always opportunities. I think that, and Murray Mullen actually said this as well, there's always opportunities. We just have to kind of continue to be thoughtful and really understand where they might be for 2023. But having said that, maybe we'll get a Santa Claus rally. Still a couple of trading days left.